Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Thursday, February 2nd, and we are 1 day removed from yesterday's FOMC meeting, where we got the expected 25 basis point hike and got a little bit of dovishness from Jerome Powell. Obviously, the beauty is in the eye of the beholder when it comes to FOMC. Everybody has a bit of a different interpretation, and Jerome Powell definitely said what a few hawks wanted to hear, but what he didn't exactly emphasize was any real unhappiness with the current situation, any more desire to inflict more control and or pain on the market. I use the word pain because Jerome Powell did use that word himself, and raising interest rates, trying to raise unemployment, that's obviously inducing pain into the market to soothe the inflationary problem. So basically what he said is that probably another hike next month. He didn't explicitly say, no hikes in June, but that the market is more or less kind of implying that is the case right now. There could potentially be a hike in June, or there may not be, but around the middle of the year is now when the market is expecting the Fed to stop hiking. So now that the market can see some sort of light at the end of the tunnel, they're attacking that light at the end of the tunnel, which is obviously higher price action bullishness. And if you go look, back at the entire history of the S&P 500, I can go back pretty far on these futures, not too far, but back 8 years. When we dip in the market, minus a COVID era, scenario, the market generally recovers. And right now, we're not in a COVID area scenario. We're dealing with inflation. We have better tools and understanding of the market than we did in the 70s, and a little bit more ability to control with the digital landscape. So, the consensus view right now is that the terminal rate is going to be under 5%. The terminal rate is the cap on federal funds rate, what the market thinks that the top of the federal funds rate is going to be. The terminal rate was above 5% before yesterday. Now it is below 5%. I think I might have frozen a little bit there, so I'll repeat that. The terminal rate was above 5% yesterday before FOMC. It is now below 5% after FOMC, which is why you're seeing the market rise, because they're expecting a lower terminal rate, meaning the end of the hike cycle, and the market can see a little bit more of the forest through the trees, which we mentioned yesterday. So a little bit of context as to why we're seeing bullish price action. And we did mention that this would likely be the case if Jerome Powell was not very hawkish and gave some nods to the doves. Of course, like I said yesterday, he sat right on the fence. But what he did not do is imply more pain, more control, more Fed action, as opposed to what is already known and been previously telegraphed. So if the market knows, if we don't have any more data until CPI comes in, that's 2 weeks of more or less freedom in the market to roam, with Jerome Powell more or less supporting a rosier picture than we had a year ago, a few months ago, the market's obviously liking that. So looking at DXY, what we can see here is we did drop below there yesterday. We obviously had a bit of a turn this morning. We had a big, strong doji wick, and body candle closed beneath the low of Thursday, the 26th. We're currently above the low of the 26th, but this 4 hour still has about an hour left. So be very curious to see how this plays out. Typically, you will not see this follow through. You'll at least see a retag to the lows or to where it was previously trading, which is, more or less this 101.1 number. So watch out for DXY. This is really the red herring that could hurt or help prices. Obviously, if it heads lower, we should see risk head higher. If this heads higher, we should see risk head lower. So, nothing's really changed there, except it has gone lower. It's testing resistance, which was previously support. And obviously, if it fails, risk is good to go higher likely. And if it confirms back up in this range, then risk may take a little bit more of a pause. Looking at equities, zooming back into the 1 hour from that weekly chart, we can see yesterday when we spoke, we were just busting above that level. I said, if we can hold up here, I kind of expected a little bit of a tag at 4,100. We obviously did not get that. We continued higher. We are now above 4,150. Which was previous resistance. And if you kind of look at the chart, there's definitely, we can definitely say that I think 4,200 will act as resistance. But if you get above 4,200, you pretty much got free roam to 4,300, which is the high of August. So, you know, that could potentially be a nice double top scenario. If you get above that, you've obviously got a lot of room to roam up to 4,600. But for now, you know, we are getting a bit oversold at this level. But, you know, looking at historical price action, you know, we seem to have nicely confirmed above the 200 moving average on the daily, retested it very nicely. We've obviously moved higher, much bigger, much higher of a boost than we got in August, and obviously a much better macro picture to boot. So if you can get above 4,200, then you have a clearinghouse to pretty much 4,300 moving forward. So, but the moral of the story is obviously we are, you know, at resistance. We have support below. We also, you know, did not really re-tag 4,100. So, you know, do we do something like this? Or do we do something like, you know, range around, maybe quick dip, something like that? We could completely, you know, ignore this support too, or not really ignore it, but bounce off of it and move higher. So important levels to watch are obviously 4,160, previous daily close, currently for any price action moving towards the end of the day, 4,130. But I think 4,100 and 4,160 are really the two numbers that you want to pay the most attention to. Looking at Bitcoin, we can see, you know, this does make bullishness a little bit more difficult with this struggle at 24K. But, you know, for the context of the discussion, stay above the previous daily close, get above 24K. You can head higher all the way up to, I think, 25K. There's room. If you confirm back under 24K, or I mean, I should say really under the previous daily close, you're probably coming down to 23.3K. And if you lose 23.3K, we have this nice demand zone right here at 20.3K, which, you know, bounced off 1, 2, 3, 4, 5 times, you know, almost a 6 here. Very strong doji above the 200 estimated moving average yesterday after FOMC. So this does look good. Obviously, this is some scammy price action to hurt overzealous longers and obviously, you know, wash out any scared traders. So I would not say have fear yet. You know, there is definitely the possibility this could be perceived as a double top, but just know that, you know, 23.7 key level, 24K key level. If you start to break back down underneath 23.3, then you have this demand zone. And of course you have 21.3. So probably not best to make any, you know, BTC or ETH trades here until maybe we see a retap or see a confirmation above 24K. But, you know, we know the levels that we need to play in order for trades to be successful, which means break above 24K, bullish, bounce at 23.3K, back up, bullish, drop back down, you know, if we confirm underneath the previous daily close and get underneath the V up, then you have the demand zone for potential trade down and then back up into the range. So a lot of possibilities here. Just depends on exactly what levels we hit first. Very similar to ETH. You know, this the 1650 was a critical level this morning. Call that out for the Trade the Chain community. We obviously moved higher, you know, tagged, you know, 1713, 1715, depending on the exchange. If you can, obviously, you know, if we stay above 1650, I think we've got a lot more room all the way up to 1760. So given the fact that this was kind of the high, 1665 was obviously the high from January 20 and January 29. We retapped off of that. So we want to see price maintain above 1665. If that's the case, I think we definitely head higher, probably towards 1760. If you break back down underneath 1650, you've got the, you know, confluence of the VWAP, estimated moving average, and support here at 1600. And then you've obviously got support at 1530 and 1500. So of course it depends level by level. I wouldn't start aping into longs if you're not long after this boost. I would wait for a confirmation at 1665 or 1650. And of course, if that breaks, then we know our levels to long or short towards. So, you know, not extremely confusing price action here. It is just a little bit scammy with the way that DXY has been acting and the way that equities are acting. Equities are obviously been extremely bullish. So has been Bitcoin, but you know, it's not going to be straight up forever. although the market is euphoric and we are likely to head higher, we have to confirm these levels. We have to continue trading above support. We have to continue flipping resistance into support. And sometimes that will entail a day where it's either flat or possibly down. As you saw this morning, we opened with a dump and quickly recovered. So, you know, the market is going to try and scare you. And that's why it's best to play level by level, not ape into things, and make sure that you're getting the best entries and exits on your trade. So I very much hope that this was helpful. One final thing to note is that Bitcoin spot buying has been pretty strong. But spot and perps are both in line. This is typically, you know, you will typically see momentum continue in the direction as long as spot and perps are more or less even. If spot's outpacing perps, that's even better because it shows legitimate buyer interest. Obviously, we're getting a bit of a sell-off here. You know, this local double top. We definitely want to see. We definitely want to see price hold above this previous daily close at 23.7. And we definitely want to see 24 broken for bullishness. Clearly, 23.9, 24K has been a difficult level. It continues to try, which is good. It continues to also make higher lows, which is even better. So, you know, I'm not calling for bearishness yet, but we need to hold these levels. And I think 23.7 or 23.3 are fantastic levels to long if you get them. So good luck. Happy trading. We'll, of course, be speaking to everybody tomorrow, for Final Friday. I put in a bunch of coins in the Trade the Chain community that I think are very helpful to track that will likely outperform Bitcoin and Ethereum, provided equities and Bitcoin continue to stay bullish. So if you're not in the Trade the Chain community, if you go to TTC Squawk Box, or if you're not in the Trade the Chain community, join at tradethechain.com. If you are in the Trade the Chain community, go to TTC Squawk Box and scroll up to last night's post. There's a bunch of coins in there. Every single one of them is outperforming today, and I think will continue to do so, provided equities and Bitcoin, manage their bullish trajectory. So good luck. Happy trading. Speak to everybody tomorrow.